Have you ever wondered if there is a way to stay invested no matter what the market is doing? That is, if the market is going up or down or going sideways without constantly checking the news? You just need two funds to build a powerful, low effort portfolio, which will work whether the market is rising, falling, or going sideways. By the end of this video, you will know how to use the power of value and momentum to create a rock solid, stress free investing strategy. Plus, I will also show you which actual funds you can start with. This might just be the simplest way to invest for the long term. Let me take you to the pandemic crash in March 2020. The markets fell over 35% in just few weeks. People have panicked, they have sold their SIPs as well as they have sat on the cash. But those who had a strong investing framework like the value and momentum held on or even invested more into it. And guess what? When the market rebounded, they have got a very good returns with value and momentum. Or think about 2022, a sideways year where Nifty barely moved, but momentum funds were rising. Value funds picked solid underpriced stocks and avoided the hype. Now that that funds are giving a very good returns. So why not let these two evergreen strategies work together for you? This isn't about predicting the next bull market. It's about staying ready for it while protecting your downside in tough times. You actually don't need 10 funds. You just need two. One that buys good companies at discount, that's your value fund, and one that rides the winners, that's your momentum fund. This combo works because value investing shines when the markets are uncertain or undervalued, and momentum investing thrives when trends are clear, like during a rally or bull run. By combining both, you build a portfolio that's ready for both sides of the market, undervaluation and uptrends. It's like having both defense and offense in your investing team. Let's simplify. You invest 5,000 in a value fund and 5,000 in a momentum fund every month. That's it. No need to time the market. No need to switch in and out. You are covered on both ends. These two styles, value and momentum, are backed by decades of data. They are not trends. They are what legendary investors have used for years. Value investing was made famous by Warren Buffett and Benjamin Graham. It's simple. Buy companies that are temporarily cheap but fundamentally strong. Momentum investing is used by hedge funds and index creators like Nifty 200 Momentum 30. It focuses on stocks that are already performing well and have a tendency to continue doing well in the short term. And the best part, you don't need to pick individual stocks. There are funds that already do this for you. They follow strict rules, rebalance regularly, and not trade with emotions. Some of the examples of value fund are ICICI Prudential Value Discovery Fund, which is a mutual fund, and NV20 ETF, which is a Nifty Value 20 Index ETF. Some of the examples of momentum fund are Nifty 200 Momentum 30 Index Fund, which is again a mutual fund, and ICICI Prudential Alpha Low Value 30 ETF, which is a ETF. Okay, it's a smart beta ETF. Together, these funds handle your entry and exit. They filter companies based on decades tested logic and they adjust automatically. No need to constantly monitor the market or switch SIPs. You will get active style returns with passive level discipline. But the problem people face is to stay disciplined and continue investing. You see, the value fund might underperform for months or even years. It will feel like you are putting money into something that just won't move. And momentum, well, sometimes it buys into winners after they have already had their big moment. It might look expensive. People will tell you that it's too late now. And during a market crash, both might go red. Your instinct will scream, should I stop the SIP? Should I withdraw? That's the challenge. This strategy demands patience. It's a game of mental strength and not just the numbers. You have to trust again. Value will rise again because good business bounce back. Momentum will find new leaders because trends always come and go. And together they are meant to balance each other out over time. So yes, the challenge is real, but so is the reward. Now imagine this. It's been 3 years. You stuck with your 10k SIP, 5k into value and 5k into momentum. There were months where your portfolio looked boring or even debt. But now, one day, when you open your investment app, you have seen the huge profit. You see growth. real solid compounding wealth. Your funds did their job quietly while you were living your life. The momentum side caught the rally, maybe tech or pharma surged. The value side scooped up those hidden gems, those undervalued giants that are now flying. Your all weather combo is working, and suddenly you are not worried about market cycles anymore. You are riding them like a pro without checking your portfolio every hour or every minute. This is the turning point most people never reach because they give up halfway. But you stayed the course. You became the investor most people want to be but never have patience for. So let's paint the picture. 5 years from now, your 10k monthly SIP will turn into 8 to 10 lakh of invested capital. But because of the power and value momentum, your portfolio can become 13, 14 or even 15 lakhs. Why? Because value brought the winners early when they were cheap. Momentum solved the losers and brought the trending stocks. Both rebalanced, adapted and kept your wealth compounding. You didn't need to predict sectors, you didn't need to jump in and out, you didn't even need to react the news headlines. You played smart, long-term investing, the kind that actually works. This is the big win. So in summary, all you need is two strategies that have stood the test of time. Value for buying great companies at a discount and momentum for riding trends and selling laggards. Together, they form a portfolio that works in almost any market, high, low, sideways, or volatile. By investing a fixed amount every month, sticking to just two funds, and reviewing just once a year, you will build a all-weather machine for your financial future. Thanks for watching. If you found this helpful, don't forget to like, share, and subscribe for more insights like this. Thank you.